I lead a team that is building the economic layer for Bitcoin.
How do I get yield on Bitcoin?
There are these liquid staking token projects, for example, Lombard or Solve, that will stake your Bitcoin into Babylon, which is the Bitcoin staking protocol, on the back end for you.
Why would I risk the best asset in the world to earn 1 or 2 or 5 or even 10% yield?
I think on the institutional side, there is more and more demand to outperform Bitcoin because just holding it is no longer enough. And the rationale here is like, well, if you're going to deploy it in DeFi, right, you might as well earn 4 sets of yield instead of 1, right? Instead of getting like 1 to 2%, you're getting, maybe 5%, 10%. DeFi certainly has its risks. SatLayer is kind of key foundation and an economic layer for Bitcoin, so we can rebuild the financial system to be better, more accessible, and more fair on top of the best asset in the world.
Hey, When Shift Happens family. Welcome to Drops, a podcast series where we showcase smaller, rising star projects in the crypto space. Since When Shift Happens started to take off, we've received hundreds of requests from many great projects every month that we had to say no to because they weren't a good fit yet in terms of size and impact. But this has now changed with the Drops podcast series. We're building When Shift Happens, the most credible platform in crypto, and there is no reason why smaller projects with big potential shouldn't have a chance to be heard. Drops is not a research service nor an endorsement, but a way to give a voice to the potential big crypto founders of tomorrow. How do you sleep?
Well, last night. Didn't sleep well the last few nights, but last night was good.
Yeah?
So, I feel good.
Last few nights you said not good?
Yeah, just didn't sleep enough.
Does it happen often or?
Because right now we're getting ready for like TG and like all these launches, so more stress.
Yeah, always stress. I mean, stress is good, right? It's positive. It makes you do stuff.
Yeah, exactly. Harness it.
But sometimes we also say that as cope.
Totally.
I like to sleep well, but yeah.
Yep.
You sleep late?
Naturally a little bit on the later side. Yeah. 12, 1.
Okay. It's actually okay.
2.
12 is okay. For me, I tend to do like 1, 2 a.m., 2:30. Like, it's terrible.
Yeah. Yes.
I mean, I can wake up in the morning later, but not good. Luke, welcome to Drops.
Thank you. And BM.
If you had to describe what it is you do and why you do it, what would you say?
Interesting.
To someone who's never heard the word crypto.
Yes. So I guess I lead a team that is building the economic layer for Bitcoin. I know I cheated a little bit.
What does that mean?
I didn't say crypto. Yeah. So I think in short, what we are doing is taking, Bitcoin, which is, I think, more and more becoming the widely recognized best asset in the world, and making it to be the best smart asset or programmable collateral.
What's the best asset?
Bitcoin, right? Because I think.
But why? What is the definition of this is the best asset?
Yeah. So the way I think about it, right, is I think Bitcoin, I think no one can argue at this point that Bitcoin is digital gold, right? It's the best store of value. And I think one thing it has as an edge to gold is that it is much easier to custody, right? And to actually transfer and fully settle, right? Because I think we probably all saw with all the recent, tariff and trade war stuff, Germany actually tried to pull their gold reserves out of Fort Knox. And not surprisingly, that has not happened, right? It was also, I think only a couple years ago, there was like a massive theft at the Toronto airport of like $30 million worth of gold, right? This is in 1 to 2 years ago when there's already security cameras everywhere, right? You think this was not possible, but it happened. And I think much differently with Bitcoin, right? It's not like you have all this tons of gold that you have to figure out where to store. It's all digital, right? And as long as you and only you have control of your private keys, nobody else can touch your Bitcoin.
I had Ben from Bybit on this podcast. They got $1.5 billion worth of ETH, right? Not Bitcoin, stolen. So I would argue, like someone reading the headlines would say it's probably easier to buy, to steal billions of dollars of Bitcoin or ETH than to go and rob a bank or an airport or whatever that has a lot of gold. What do you say to that?
Yeah, I think it's actually a pretty nuanced question, right? Because I think, when you talk about small amounts, right, it's actually, I think, in many ways easier to kind of custody your own crypto. Because, right, when you're talking, let's say, a couple $100 worth of gold, like, what are you gonna do? Carry the gold bar with you everywhere, right? Because sure, there's like gold ETFs, etc., right? But for a lot of those, you don't actually have custody of the actual gold, right? And then it's, JP Morgan is custodying it in your behalf. Maybe it's actually even sitting, probably not Fort Knox, but like some other, right, vault. And so, push comes to shove, right? I'd say maybe not in the US, but let's say in Europe, in Ukraine, right? When the war breaks out and then you no longer have access to that gold and you just have this, piece of IOU for that gold, right? Whereas and I think Ukraine and a lot of countries where there's kind of, I would say, turbulence is a good example where for a lot of folks like fleeing those countries, like crypto is something that they used, right, to kind of hold on to their personal assets and wealth.
You were the first employee at a Kickstarter hardware project that raised over $3 million. Then you went on to McKinsey, and then you went deep into crypto. What's the common thread in all of these three lives?
Yeah. So I think the Kickstarter experience really, I think in many ways was a dry run for crypto. Because I think for folks that have, kind of invest in Kickstarters, right, or certainly have worked on Kickstarter teams, it's a lot of the same dynamics, slightly different, apps, slightly different channels, slightly different methodologies. So instead of thousands of users, right, asking us every day, when token on Twitter, Telegram, and Discord, we had tens of thousands of Kickstarter backers every day in our Slack asking us when shipping of the product, right? And I think, in many ways, like there's tons of similarities between crowdfunding and like ICOs, right? In many ways, I think ICOs were like an evolution of crowdfunding that was, more efficient. So I learned a ton from that experience. And then, from McKinsey, that was actually my first job out of school, way back, I guess, over a decade and a half ago at this point. I think for me, it was actually a really good experience because I think, one of the biggest learnings for me from McKinsey was learning how to learn very quickly and very effectively on topics that I had no idea about, like let's say even the day before, right? And I think crypto is very much similar in that space, similar in that, there's so much happening and so many new things popping up on a daily basis, right? That it's really, I think, the folks that can learn and adapt the fastest that will, one, survive long-term in crypto and do well long-term in crypto.
What's the most important thing or most useful thing that you learned at this Kickstarter project that is, because it's so similar to crypto, right? That is so useful now for what you're doing?
I think it's I guess there's probably like two sets of learnings if I was to categorize it. One is just, I think, being in a very dynamic environment, right? And especially back then, so this was like back in 2016, a very non-traditional startup, right? Where we had this active community that we could get feedback from on a constant basis, right? And engage with, and for them to almost be like our ambassadors very early on. I think, most startups, especially back then, did not have that dynamic, right? If you're doing like a, SaaS startup, for example, like a Web2 startup, you don't necessarily have this like big community. And so that was, I think, a key learning and certainly has helped, kind of now building SatLayer. I think in addition, I think the other piece is really, I guess in many ways, just like a lot of the almost like the toolkit, the founder toolkit, right? Of like just being at a super late stage startup, being the first employee there, and really kind of building everything from the ground up, right? Going from 0 to 1. I think this is where, so when I was a crypto VC, I think this is kind of a quality we always look for, is the people that either already have a 0 to 1 experience at a startup, right? Because I think honestly, a big part of it is pattern recognition, because there's probably 80% of things that you do going from 0 to 1 for a startup, for a bunch of different things, right? That is transferable to like the next venture. And so, knowing how to do that, it will give you a big edge early on of like, just, kind of, entity setup, done this. I know who to talk to. I know exactly structure, and it takes me like, 1 hour instead of like 100 hours of talking to lawyers, right? Or even, hiring the early team, right? Done that before, know what qualities to look for, versus kind of figuring it out by trial and error.
You said before the difference and the similarity, right, between this Kickstarter startup and your current protocol is when product, when token. People asking that, right? Is the token the product?
Yes and no. I think the token is one of the products of any protocol. And I think, just practically speaking, right, doesn't matter if you're like the hottest protocol in the world, if you launch a token and it basically goes to 0 very quickly, I think that will give you a lot of challenges, right, in terms of go to market, in terms of retaining the community and people's interests, and like being able to continue to execute, right, not just on the tech, but on like key partnerships and having like a strong community of users interested. But I think in many ways, right, the token is also like in many ways the start of the journey, where, at the end of the day, I think most builders in crypto are building protocols that do things, right? And a token is a key component of that, but is not the kind of core product. So I think in many ways, it's like it's a means to deliver your core offering and to, if done correctly, supercharge your offering. But it certainly is not easy, especially the cycle.
Yeah, some people say, actually many people say, or joke or meme, number goes up is the best technology in the world, right?
Yeah, it's like the tech just got 20% better today.
Yeah, overnight. Right? Talking about number goes up and the tech, there's this thing called Bitcoin, BTC. Some call it boomer technology coin, right? We always hear that it's digital gold. You even said in the beginning, it's that almost no one can say anymore that it's not digital gold. There's argument for and against, but you're saying that digital gold is actually not enough.
Correct.
Why does Bitcoin need more utility to survive long term?
Yeah, I think a couple of different facets of this. One is, if you actually take the kind of true hardcore Bitcoin maxi view, Bitcoin just as digital gold in its current form with the current security model doesn't work long term. Because after like subsequent halvenings, right, like 2-3 more halvenings, the fee to miners will, kind of half every time, while conceivably the value of Bitcoin keeps growing, right? So at some point, this whole model breaks unless you have miners earning enough fees to be able to sustain themselves and all the electricity they're consuming, all the ASICs hardware that they have to buy and refresh to keep running, right? And so
what does that mean if the model breaks concretely?
Yeah, so Bitcoin security is not enough, right? And then the whole thing falls apart, because the whole point of Bitcoin and the reason it's digital gold is that its security is so sound, right? Is that it's proof of work, and you need to control 51% of the mining power to be able to attack Bitcoin, right? As the costs, so if the miners aren't making enough, right, then one way to solve this is like, okay, mining costs come down. But then as the asset gets more valuable and the cost of securing is lower and lower, that means it's more susceptible to attack, right? So the other way to solve this is to have, for the miners to get more revenue. And so that means Bitcoin needs to be able to be used more, right?
That's a very important point, right? I'm pretty close to some very, very, I would say, old OG Bitcoiners, some of whom were very famous, actually. And there's two schools of thoughts, right? The ones who are saying, don't touch it, the number is going to go higher. And the ones who are saying, if the price doesn't at least 2x every cycle, then it's going back to like 10 or 20K. And they're lovers, right? They're Bitcoin lovers, but they think exactly the same reason as you're saying. At some point, the model breaks. And I think it's something that Roger Ver actually talked about a lot and got a lot of criticism for. And some other very, very smart people who made billions of dollars with Bitcoin and still own it actually think the same. So people need to think that maybe number doesn't go up forever if we don't improve things, right?
Exactly.
Which is what we're trying to do here. Let's simplify this for my gold bug uncle. You said before, Bitcoin is not only digital gold, but it's the best programmable collateral. What does that actually mean in human terms? Bitcoin is becoming programmable collateral.
Yeah. So I'll kind of explain this a couple of different ways to like take some different angles, right? So I think what that means in the simplest terms is that we believe Bitcoin will be the foundation of a whole new economy, right? An entirely new kind of financial system or even financial order that is being built up, right? And I think in many ways now we're seeing, with the trade war, with the tariffs, right, and everything, that more and more countries are actually shifting off the U.S. dollar, right? And for me, right, I immigrated to the U.S. when I was 8, like spent the rest of my years there until last year when I moved back to Asia. But I think, in many ways, if you take a step back and look at the history of reserve currencies in the world, right, for like the past 500 plus years, no reserve currency has really lasted more than a century, right? And so,
Certainly.
I think our view is the same is now happening to the US dollar. And, I think for me, it's unclear where that goes, right? Maybe it's a bipolar world in the short, medium term where it's, there's an Eastern sphere of influence and a Western sphere of influence. But kind of regardless how it plays out, I think, nation states are starting to actually accumulate Bitcoin and even use Bitcoin for settlement, right?
There are examples.
Yeah. So the examples, I think recently it was like, China and I think Russia were settling, I think, oil trades with Bitcoin, right?
Why would they do that?
Because they don't want to use the dollar, right?
Why?
And because, I think they are actively, relatively adversarial to the US from like a geopolitical standpoint. And so if they use the dollar to transact, they're actually just giving the US like more economic influence, right? And I think, the ruble has a whole host of issues, right, of using that to transact. And then the RMB is also just, I think Ray Dalio brought up these points. It's not a great, maybe Raul Paul or both. RMB is not a great reserve currency because it's not very transparent. It's very, right, it's not freely floating like the USD is. And so it doesn't have a lot of the key characteristics of a good reserve currency, right? In the meanwhile, you have this Bitcoin thing that is, credibly neutral, right? No kind of, no country controls it. No country can, control the supply of it or print more of it, right? So it's actually a pretty interesting asset to actually make in terms of settlement, right? I think it's at this point that and stablecoins, but most stablecoins are USD denominated.
So what does that mean in human term?
Yes.
That Bitcoin is becoming programmable collateral.
Yeah. So I think really at the core of what we're doing is that, I think we've kind of established Bitcoin is the best asset, or at least one of the best assets, right? Currently or in the history of humanity. And so when you have that, and in many ways, I think if you go back to the kind of the genesis of Bitcoin in the Bitcoin white paper coming out in 2008, right? Bitcoin was launched as almost like the antithesis or the alternative option to the current financial system, right? That has a lot of leverage, that has a lot of like inequalities, right? Inequalities in terms of access, inequalities in terms of wealth, right? And so I think in many ways, we're actually going back to those roots where we want to build this new financial system, new economy on top of Bitcoin that is actually fair, right? More accessible for everyone. And so how we do that is if you look at the history of financial systems, right? Kind of before the current fractional reserve banking, when it was gold-based banking, I think in crypto, it's kind of starting, like crypto and DeFi in general is starting there, right? And so what we want to do is now, instead of DeFi being dominated by kind of ETH and stablecoins, is to have Bitcoin being the biggest asset in DeFi, and doing this by enabling Bitcoin to be the biggest and best collateral in DeFi so that people can borrow against it. People can build, let's say DEXs on top, right? All these kind of like these financial primitives on top of Bitcoin. And then from there, people can kind of then build the economy on top of Bitcoin.
You said something pretty well the other day when we talked. You said ETH was the testnet for Bitcoin, or Ethereum was the testnet for Bitcoin. What did Ethereum prove?
Yeah, I think Ethereum really proved out the PMF for DeFi, right? The viability for DeFi. Certainly all the kind of DeFi OGs and pioneers created all the key DeFi primitives, right? That a lot of times were kind of evolutions on kind of TradFi version of these primitives, right? But kind of more efficient, right? Fairer, more transparent, and better. And so, I think certainly goes without saying, right? The performance of ETH, the token, right? This entire cycle, right? Versus like the stark contrast with Bitcoin, this cycle, right? Where Bitcoin is, especially in the last couple of days, right? Back to close to all-time highs. And then ETH, I think, is not far from its all-time high back in 2018, which is pretty crazy when you think about it, right? 7 years ago, like 2 cycles back. And so I think, in many ways, ETH has really kind of proven out the DeFi protocols, mechanisms, and infrastructure. And so I think now it's time to really bring that all to Bitcoin, or like plug Bitcoin into that, right? So that you have now the best asset in this space, in crypto and beyond, as the core asset of DeFi.
Why is now the moment to rebuild it all around Bitcoin?
Yeah, I think a couple things happened over the last like really 1 to 2 years to really make now the time, right? One is Taproot for Bitcoin.
What is that?
So Taproot was a Bitcoin protocol improvement that at least enabled, like, it's almost like some hacking of Bitcoin to enable like pseudo smart contract capabilities. So that's actually what enabled Babylon to kind of build their staking protocol, and for people to actually natively time lock Bitcoin on the Bitcoin protocol itself to enable staking.
So before this Taproot upgrade, Bitcoin was a non-programmable, right? You couldn't do anything with it except kind of buying and holding and storing it.
Yeah, you could do some basic. Yeah, correct. You could do some basic things, but it was not Turing complete, and so it did not have like the smart contract capabilities that like ETH and right like Solana, like all these other assets and layer ones have.
So this is one thing, Taproot. What else?
Yeah, I think the other is certainly ordinals and inscriptions. I think definitely.
What is that?
Yeah, so ordinals was kind of post Taproot. People figured out, you could do like you have more programmability on Bitcoin than before. You still don't have like full Turing complete smart contracts, but it's much better than before. And so people started making basically Bitcoin NFTs, for lack of a better word, are ordinals, right? And then kind of also inscribing the art, right, and just messages on Bitcoin. And so I think in many ways I think ordinals are kind of the are more true to the vision of NFTs, right? Because again, certainly NFTs were pioneered on ETH, right? But I think it was actually, I think yesterday where there was, went around crypto Twitter that one of the artifact collections, because they didn't renew their AWS subscription, all the art is now gone because they was all on AWS, right? Whereas for Ordinals, the nice thing is the art is on Bitcoin, inscribed on Bitcoin itself, right? And so the art is actually there forever. And that's, I feel like, how NFTs should be. But kind of going back, so Ordinals really kind of paved the way to at least making the whole Bitcoin space more friendly towards innovation, right? Because I think pre-Ordinals for the last, certainly, kind of, what was it, 2020? I forget, it was like 22 and 23. Basically, pre-Ordinals, there was quite a lot of Bitcoin maxism and folks saying Bitcoin should just be digital, shouldn't change, right? And so it's not a very friendly environment to builders.
It's probably still the case. There's still probably a lot of people who are thinking that Bitcoin should just stay how it was because it got so successful by being, in everything, in business, in technology, in anything, the simpler, the better, right?
I think it's actually gotten a lot better. So I think for us, we really haven't gotten much pushback from, I would say, the Bitcoin maxis. I think at most it's maybe just like ignorance, right? Or, they just don't talk to us, don't care about us, which is fine. Because, I think for us, for SatLayer, like we like to really show by doing, right? And so happy to show them the benefits of what we're building, and then really to show them like what we built, right? And to convince them that way versus getting into these like philosophical arguments, which I think, at times can be important, but at the end of the day, let's just show them what we got.
Absolutely. What is Bitcoin DeFi, Bitcoin decentralized finance?
Yeah, so I think there's a few flavors of it. There's kind of one approach that's really looking to kind of build a lot of these DeFi protocols natively on Bitcoin, right?
For example?
You have...
Not specific protocols, but what can I do? Think back with the Bitcoin as a programmable collateral or pristine collateral.
Mm-hmm.
What can I do concretely as a normal person who maybe I'm thinking, I buy this Bitcoin thing because I believe it's going to go up in the future and I could do nothing with it.
Yep.
What can I potentially do now that I couldn't do before thanks to this Bitcoin decentralized finance world?
Yeah. So I think one angle, there's teams that are kind of allowing you to either settle, let's say, for example, like a DEX trade, right? Decentralized exchange trade directly on Bitcoin or on an L2 that will then settle directly on Bitcoin. So that's kind of one direction folks have been building.
Why would I do that? Why would I use these protocols?
Yeah, I think the rationale here is that, Bitcoin is not just the best asset, but the best crypto. And over time, I think this may be a bit more the max view. Over time, most other protocols go to zero and are useless, and Bitcoin will only accrue more value, right? So if you believe in this, then it's a bit of a logical step, I would say, to then think, okay, well, if I want my transactions to be truly secure and immutable, right, and around forever, then I would actually want to settle it onto Bitcoin itself. So that's kind of one approach. I think the other approach is bringing Bitcoin and plugging Bitcoin into the rest of crypto, right? To like the existing blue chip DeFi protocols like Aave, like Compound, right? Like Pendle, and really making Bitcoin almost like the gold standard, the premier asset in the rest of crypto. And so I think for us, we are more of this second direction. And then I think we are also looking to connect Bitcoin, right, almost to I don't want to say real world, because I think crypto itself is very much now permeating through the real world. But really, I think plugging Bitcoin into institutions, nation states, right, and just bring Bitcoin everywhere.
So if you're more the second kind of flavor, right, it means that you don't believe that the other ecosystems are going to zero.
Certainly not in the short term, right? I think long term, I don't know. For me, honestly, being crypto, I just don't really think about the long term much because like no
Makes
one in
sense.
crypto knows what's gonna happen in 2 to 3 years, like much less 5 to 10 years, right? We could have a world war and then like everything goes to zero, or like we could have AGI, like actual like sentient AI, right? And then like a lot of things that was valuable is probably no longer. So I like to think about more in like the short term and medium term and
Yeah.
what we can accomplish then.
If I were a founder trying to pick between building in Ethereum DeFi or Solana DeFi versus Bitcoin DeFi, what's your pitch for why I should bet on Bitcoin DeFi today as a builder?
Yeah. I think if you look at the TAM, and like how much of Bitcoin is currently utilized in DeFi, it becomes super interesting, right? I think at
Give
this,
some numbers.
yeah. I think numbers, but also the, okay, I would say the TAM and like the market opportunity is one. I think the other is competitive dynamics. So I'll double click on each real quick. So in terms of the TAM, right, I think less than 1%, it's probably closer to 0.5% of all Bitcoin is actually utilized in DeFi in some form today, right? If you look at Ethereum, Solana, right, that number is like 20 to 30% of ETH and of Solana, right? And so even if you take a conservative assumption, let's say even like 1/3 of Bitcoin only gets like 1/3 of that 20 to 30%, right? You're still at like 10-ish% of Bitcoin utilized in DeFi, which is a 10 to 20x from today, right? And so I think there's huge growth opportunity, especially if you kind of go to the second, like go one level deeper here, right? Bitcoin is honestly the first crypto asset that's now not only getting institutional adoption, but nation state adoption, right? And so, and I think now that everyone believes in Bitcoin and is starting to hold Bitcoin, right? Humans are greedy at the end of the day. And so now everyone wants Bitcoin yield, right? And DeFi is a very interesting way to generate Bitcoin yield. And so I think that's one of the big reasons from the market opportunity side of why builders should build in Bitcoin. I think the other is the competitive side where, ETH, there's a ton of competition for building anything in EVM, right? Generally, for any idea, there's probably like 3 to 5 to 10 teams working on it. Whereas in Bitcoin, because it's a newer space, there's actually a lot less competition. And so you can take a lot of the learnings or the latest, like, bleeding edge innovation and research from EVM and apply it to Bitcoin. And so I think that's like a bit of the kind of founder arb that you can do.
You said people want yield, especially the institutions. How do I get yield on Bitcoin?
Yeah. So there's a few ways. There's like the traditional way of, kind of trading strategies, right? Delta neutral strategies to get yield on Bitcoin. But the challenge with those is that at the end of the day, crypto and Bitcoin are volatile assets. And so if not done correctly, you're really picking up pennies in front of a steamroller, right? Because for example, for some of these delta neutral strategies, you're trading options. And when there's a big move, your options actually end up getting exercised. And then suddenly, instead of being up like, 1 to 2, 3%, you're now down on your principal, right? And so that's one way to get yield on Bitcoin. The other is, I think, more crypto native, DeFi native ways to get yield. So, for example, today, you can actually easily get 4 sets of yield on your Bitcoin without even going into like kind of downstream DeFi, for lack of a better word. And so how does that work?
So if I'm a normal person, I can there's 4 different ways. I can go, okay, I'm Kevin. I'm not very technical. I don't have a lot of time to do all this stuff. And probably I'm not even able to do it. There are 4 ways I can earn yield on Bitcoin. How?
Yeah,
what are these
it's
4
not
ways?
4 ways. It's with your same Bitcoin, you can actually get 4 sets of yield from that same Bitcoin.
At the same time?
Correct. At the same time. Yeah. So how you do it is, through SatLayer, through Babylon, through LST, and through an L1 of your choice. So specifically, right, there are these liquid staking token projects, like for example, Lombard or Solve, that will stake your Bitcoin into Babylon, which is the Bitcoin staking protocol, on the back end for you and mint you this LST token, right? So that you can do more with your staked Bitcoin. So that's step one, is like choosing, kind of LST of your choice. There's like 4 or 5 different, major ones right now. And so it's really whichever one you prefer, or you want to get, you want to kind of get yield from. So that's the first source.
So that's called Bitcoin staking.
Liquid staking. Yeah.
What's the kind of yield I can get from Bitcoin liquid staking?
I think so Solve has a liquid token that's trading. So you can get their token, and then Lombard has yet to launch their own token, so it's points right now. So there's some kind of estimation, but I think generally you can probably, depending on how your assumptions like land at like 1-ish%. I would say maybe 1 to 2% depending on your assumptions.
But not paid in Bitcoin.
Correct. It would be paid in their tokens. Lombard points, and then Solve, I think, is doing points that you can then redeem for tokens. But their token is trading.
What's the risk if I stake my Bitcoin on one of these protocols?
Yeah. So the risk is they do take custody of your Bitcoin in order to then on the back end stake it into Babylon, right? And so Babylon is kind of built the leading Bitcoin staking protocol. So that's also where the second source of yield comes from, is Babylon itself, who just launched a token, I guess now a week and change, almost 2 weeks ago, actually 2 weeks exactly, and so they've kind of built the leading Bitcoin staking protocol, and they're the ones that I mentioned earlier that actually, through a time lock mechanism, locks your Bitcoin natively on Bitcoin DL1. And then, so their yield ultimately comes from providing Bitcoin security to other proof of stake blockchains, like, for example, Sui or Bob or TAC.
Why would I risk the best asset in the world to earn 1 or 2 or 5 or even 10% yield?
Yeah.
Because Bitcoin is up, whatever numbers, 100, 130, 140% every year.
Yeah.
In the last, 10, 15 years, right? Okay, there's a lot of ups and then massive downs, but if you take the average, it's up massively. That's why also people call it the best asset in the world, right? Mm-hmm. It's up a lot. If there is anything I learned from interviewing big investors in the space, for example, Raoul Pal or James Wu, the youngest crypto and Bitcoin billionaire, it's that these guys are, and I'm in crypto for the capital gains and the yield risk. I mean, the yield is not worth the risk. Because we've seen that in the last couple of years, right? Everything blows up and then you lose everything.
Yeah.
Why would I take the risk?
Yeah. So I think for 2 reasons. One is, at this point, because in part Bitcoin is so easy to access now, right? Through ETFs, through just like, centralized exchanges, right? Many different ways. Everyone else's performance is starting to get benchmarked against Bitcoin, right? For most liquid funds now, so I think a report came out, a couple of days ago, by I think Yogita of The Block, right? That talks about liquid fund managers are getting instructed by LPs to not hold Bitcoin because LPs can just buy a Bitcoin ETF or just like hold Bitcoin themselves, right? But their mandate is like still they're compared against Bitcoin and they need to outperform Bitcoin. Which
is very hard to do.
Exactly, right? Yeah. And so it's like, especially with the way this cycle's played out, it's like, for a lot of the alts, the big example here is ETH, right? If you're a liquid fund that's heavy in ETH, like you are down bad. In dollar terms and even worse compared against Bitcoin, right? And so I think on the institutional side, there is more and more demand to outperform Bitcoin because just holding it is no longer enough, right? And then I think for kind of the individual side, I think it comes down to portfolio allocation, right? Because generally, I think for a lot of people, right, the way you allocate your portfolio is like you probably have a portion that's Bitcoin cold storage, like you're just basically hidden it away, don't want to touch it, right, for the long term, for retirement, etc. And then you have kind of your DeFi farming portfolio, right? And so I think now Bitcoin can be a part of that portfolio. And the rationale here is like, well, if you're going to deploy it in DeFi, right, you might as well earn 4 sets of yield instead of 1, right? Instead of getting like 1 to 2%, you're getting, maybe 5%, 10% on that Bitcoin, right? Sure, there's additional risk, but there's also additional yield, right, to kind of offset that risk.
So you said liquid staking, right? First.
Yes.
Then you said Babylon. What is that? Is it staking or is it restaking?
Babylon is, I view it more staking, right? This is where it's like, there's certainly a bit of confusion in the space because, and the answer is like, it's, the deeper you get, it gets a little tricky and complicated.
Let's say I'm your Uber driver, right?
Yeah.
I don't understand shit about crypto. I have Bitcoin because I think it's cool. What is Bitcoin staking and restaking? What do you say?
Yeah, so Bitcoin staking is basically, Uber, that's
Uber
a fun
driver.
Yeah, I think Bitcoin staking is basically locking up your Bitcoin and getting some yield in return. And so where that yield comes from is providing security to other blockchains like Sui. Like Sui is probably going to be the one they recognize the most, right? Or like the other ones probably less so, but like Bob or Tax.
So Sui, for example, would borrow security from Bitcoin.
Correct.
Why would they do that?
So for a couple of reasons. I think one, because as we kind of talked through earlier, Bitcoin is the best asset, right? And has the highest security of any asset in crypto, right? And the strongest security model.
So this is Bitcoin staking. What is Bitcoin restaking?
Yeah. So Bitcoin restaking is, I think, using the Bitcoin that you're staked, right, to not just secure other blockchains, but to secure additional things like other like applications or infrastructure, right? Or even just using it as collateral in DeFi. So that's kind of how we think about restaking. And that's what SatLayer is building.
There's a concept called, in the traditional financial world and also in crypto, called rehypothecation. Sounds like that? What you're just describing now.
Correct.
But this sounds like leverage, meaning risk of blowing up, meaning risk of losing my Bitcoin.
Yes. So
or getting liquidated, or losing my most precious, my most amazing and best performing asset in the world.
Yeah. So yes, there is risk. There is some downside risk, right? But there is that in not just restaking, but staking as well. And so that comes in a form of slashing, right? So the whole concept of slashing is for any staking or restaking protocol, you need slashing to basically enforce good behavior and to punish bad behavior, right? So if someone's actually trying to attack the network, attack the staking or restaking protocol, you need the ability to slash them so that they are economically punished for trying to attack, right? And so yes, there is some risk, right? But I think part of it comes down to, for additional yield, there's got to be some risk because otherwise it's like free money and then we're just back to printing money again.
So we're still not done with these 4 different...
Yeah, sorry. Yeah, we keep getting distracted. Yeah, so...
but it's important because we need to understand each part of the process. Right
Absolutely.
Now we defined most of the big terms.
Yeah.
So liquid staking Bitcoin, right? This is first source of yield. Staking Bitcoin, second.
Yeah.
Third one.
Yeah, let me lay out the stack and then we can finish double clicking, right? So the stack is Bitcoin LST of your choice, right? Which then stakes on the back end into Babylon. And then they will mint the LST token so that you can do more things with it. And so you can choose to mint that LST token on these different L1s or L2s that are actually incentivizing folks to mint the LST on their chain because they want more Bitcoin on their chain to be used in their DeFi ecosystem, right? So that's your third set of yield is from the L1 or L2 of your choice. And then the fourth set of yield is from depositing that into our protocol, SatLayer, right? Where we will then give you the fourth set of yield. And then we also use the Bitcoin LSTs that you deposited to secure applications and infrastructure, which I can go into later.
And none of these 4 yields are paid in Bitcoin. I mean, you can convert those
Correct.
into
You can
Bitcoin,
convert, yeah, but they're
not-
in, you know, the LST's token, Babylon's token, the L1's token, and then our points right now.
Okay.
And, you know, points won't convert.
You're building a protocol called SatLayer. How do you explain what SatLayer is to your mom?
All the tough questions today.
That's
I think
that's what we do here.
No, I love it.
Otherwise, my mom is never gonna use any of this stuff.
Yeah.
And so, I mean, obviously you can say, yeah, this is more for new generation, etc. But I think if people want to understand, even new generation, we need to explain things to our mom.
Totally. I think so. The way I would explain it is, if you want a good amount of yield on your Bitcoin, right? Then SatLayer should be interesting for you. And then what we do is use the Bitcoin you deposit with us to lay the foundation for for building this new economy, this new financial system, this new financial order on top of Bitcoin. And how we do that is by using the Bitcoin you deposited with us as the best form of collateral, right? For different use cases. So a couple example use cases that our team has been pushing very hard on. One is insurance, right? So if you think about crypto, right, a lot of things are risky, as we've kind of, talked about earlier, right? DeFi certainly has its risks, right? Both within the mechanism, as part of their design, but also from risk of like exploits, risk of hacks, right? Risk of like economic attacks on DeFi. And so one of the use cases for insurance is for lending protocols. And for lending protocols, right, generally within crypto, it's all over collateralized loans. And I think crypto's yet to kind of figure out under collateralized loans. But what we do is basically offer insurance either to the lending protocol or to like users of the lending protocol, right? So that you can actually have in case something bad happens to the lending protocol, you actually have coverage, right? And you will be made whole. So that's kind of one use case for that we've been working on for this kind of restake Bitcoin that we get, right? And, certainly kind of maybe going a bit more like nerding out a little bit, there's been pushback, I think, within crypto on restaking of like, where does the yield come from? So in this case, it's actually very straightforward. The yield comes from the insurance premiums that these lending protocols or users pay, right, to have this coverage. And I think for this insurance use case, it actually is super interesting because that is very much like the beachhead, the first step of this insurance use case for Bitcoin. The second step is actually, this is a critical piece in unlocking under collateralized loans, right? To really build a more full-fledged financial system, and is really one of the holy grails of crypto is to be able to do under collateralized lending, right? So now because you have this insurance, almost like a backstop or lender of last resort for under collateralized loans, let's say you pair it with like, maybe a decentralized ID solution or some on-chain credit score, maybe even your Kaito, kind of profile, right? Then you unlock under collateralized loans. And so for these lending protocols, it's an entirely new product and business line for them, right? And for this insurance use case, it grows even further from there, right? Because you can offer similar kind of insurance and mechanisms for perp dexes like Hyperliquid, right? To protect Hyperliquid against bad liquidations like they experienced recently. And then you can expand from there to offer slashing insurance, right? For restaking and also for even staking in general, right? So now it's like, okay, let's say, of the yield farming that we're talking about earlier, right? Maybe you pay a portion of this, let's say 5 to 10% that you get, so that you're protected, you have like principal and downside protection, right? So now you will actually never you will never have negative returns by giving up some of that yield, right? So now I think this is where it gets super interesting.
If you had to say in 1 or 2 sentences max, why does the world need SatLayer? What would you say?
I would say we are in a period of significant change in the world, including of the broader financial system and financial order. And so SatLayer is a kind of key foundation and an economic layer for Bitcoin. So we can rebuild the financial system to be better, more accessible, and more fair on top of the best asset in the world.
We talked about restaking, rehypothecation. It's such a complicated word. I'm even struggling to pronounce it. LSTs. It all sounds very complex. What's one real world analogy that makes this all click for people outside of the crypto echo chamber?
I think the real world analogy would be structured financial products, right? Derivatives, even options, right? I think a lot of people may be familiar with, right? So I think in many ways we're building the crypto native version of that. We're enabling people to build the crypto native versions of those on top of Bitcoin. And that's how you get a true financial system.
You believe Bitcoin's killer app might not be payments, but security? Why do you think security could be the next wave of Bitcoin adoption?
So I would say it's not so much like security in the traditional sense. It's more like economic security and economic settlement, right? I think payments in terms of like day-to-day payments, I don't know if certainly in the short term Bitcoin will be that, right? But I do think it is the medium of exchange for settling transactions in value. So I think the difference there is that, for day-to-day, right, I believe it's still going to be stablecoins in, kind of your local denominations, right, that will help settle. But when you think about the kind of bigger transactions and the more like financial plumbing, I think it makes sense for Bitcoin to be at the core of that.
Do you think there is a world where most of the stablecoins transactions are settled on Bitcoin?
Yeah, I think certainly there's been big pushes on that end recently by some of the recent developments. And so I think that is a very interesting direction for things to go. And there's also some of the kind of more Bitcoin native teams are also kind of, building stablecoins that are backed by Bitcoin.
I'm using stablecoins for everything almost now.
Yeah.
I was using it on Ethereum. Now I use it on Solana mostly, because it's cheaper and because I got used to it. So even maybe now Ethereum might have become much cheaper, but still I'm just using mostly Solana. Why would I move to Bitcoin?
I think that's a great question, right? And I think
because it works, right? Solana works well. It's cheap. It's super fast.
Yeah. I guess maybe coming at it another way, I think cross-chain interoperability are still like huge issues within crypto, right? I think for the more crypto natives listening to this, we probably all experience like when you bridge over, especially a stable coin to a chain, you have like the bridged version, you have the canonical version. There's like 4 or 5 different versions of like USDC or USDT, and you're like, wait, like what's going on here? Like, what is all this? Are these ones real? Are they like scam ones, right? I think overall it has a long way to go, but I think over time it comes down to what is your worldview in terms of the dominant L1s long term, right? So I think for day-to-day transaction for small amounts, like I think Solana is great, right? But let's say for example you're a nation state transacting hundreds of millions or even billions, right? And you want to use blockchain for that. Then you're probably just picking, like transaction cost is no issue to you. You want the maximum security. So if you want maximum security, there is no better than Bitcoin, right? And I think in part that's why Russia and China have been doing like settlement using Bitcoin, right? Instead of, Ethereum was the go-to number 2, but it's like, now there's a lot of questions around using that to settle transactions of that size. And then I think the other piece is, being able to mint a stable coin that's backed by Bitcoin is also quite interesting, right? Because then again, you can actually put your Bitcoin to work, right? And then for I think the more Americans listening to this, there's tax benefits where it's, you're not selling your Bitcoin, but you're still able to actually, like get value and use from it in a tax advantage way.
What does that mean? Really mint a stable coin that is backed by Bitcoin?
Yeah, so I think there's some teams using like kind of like the maker model, right? To basically have the stablecoin actually be over collateralized and backed by Bitcoin, so that the peg is actually maintained through the collateral here. So that's kind of like one method, and then I think there are some newer teams using some slightly different methods as well.
What's your biggest prediction for Bitcoin DeFi in the next 18 months? One that most people are still underestimating.
I think my biggest prediction in the next 18 months is Bitcoin DeFi, or even just like Bitcoin finance, right? Will be one of the biggest growth areas in the next 18 months, if not the biggest.
Why?
I think tying together a lot of things we discussed, right? It's kind of the only asset within crypto that's getting nation state adoption and not just institutional adoption, right? And I think, both institutions, nation states are very financially savvy. And so once they start holding Bitcoin, they actually, I think a lot of times will actually want to then use Bitcoin for things. Right. And generally, it's more like financial use cases. Right. Like at the end of the day, they're not going to use the Bitcoin they hold to buy coffee. Right. But what they do want is potentially to borrow against the Bitcoin that they hold. Right. Or to, to use it to settle certain high value transactions. Right. All which means that you need these financial / DeFi rails for Bitcoin.
Let's go a bit further than these 18 months. Imagine it's 2030. Bitcoin is no longer just digital gold, but the base layer of global finance or the economy. What had to go right to make this vision a reality?
I think in many ways, it's just continuing the current direction and doing more of things, right? I think as with most things in crypto, we're certainly going to have blowups, right, along the way. I think that's one thing is the blow up can't be like super massive, right? Then potentially, we get like timeline moves back quite a bit. I think the other is 2030, so 5 years from now. I guess possible that, we have some breakthroughs in quantum computing that time. So then Bitcoin will need quantum resistance. Which teams are already working on, because I think to my understanding, certainly no quantum expert by any means, but I think one of the biggest concerns around Bitcoin in terms of quantum resistance is that it likely could need a hard fork, in which case Satoshi's wallets is kind of the big question of assuming Satoshi's not touching those anymore, right? Then hard fork, you have to actually like migrate over. And so those wallets could be potentially susceptible. But I think, certainly of the view too, that if we do have quantum computing, like even, basic encryption algorithms like SHA-256 are no longer enough. And so there's going to be a whole lot of things the whole world needs to worry about.
Let's say SatLayer is a character in a game. What are its 3 special powers, and what is one fatal weakness?
Oh wow, it's a fun one. Special powers. I guess one is being able to transform things, because that's very much what we're doing with Bitcoin, right? Is transforming it from the best asset to the best smart asset, or the best programmable collateral. I think another is probably giving other characters power-ups, right? Because I think, we're kind of empowering users to now get yield on their Bitcoin and multiple sets of yield on their Bitcoin. And then I think the third would probably be like, Super Saiyan style power-up, right? With like, gold hair, which is just I think very on theme. And then in terms of fatal weakness, I would say. Now that one I'm not sure. I guess it's like
We're too good.
huh?
We're too good. We can fail.
Maybe it's like SatLayer, the character would move very fast, and so like maybe he has to like, regain energy after a bit. Yeah, in terms of like a game mechanic.
What's the one thing I need to remember, or listeners need to remember from today's conversation that they can bring to the family dinner table on Sunday?
I think, okay, I'm going to cheat and say two things. One is Bitcoin yield, right? Family dinner, most folks are probably thought about holding or maybe already holding some Bitcoin. So it's now you can get meaningful yield on your Bitcoin. And then the second is, I think, more of like the open discussion point around what is the family's view on the future world economy, right? And the future world financial system running on Bitcoin.
Thank you, Luke. Thank you for
Kevin.
this. Definitely helps me widen my mind and my mindset on Bitcoin and the possibilities that are available or soon to be available with my precious. Thank you.
Thank you.